Morning, Helen. Thank you, Lee. All right, we've got a very small group here today. I guess it's just throwing people off that we're doing Tuesday instead of Monday. They're not even paying attention to it. But let's jump in. So keep in mind, everything we look at is for educational purposes. Nothing's meant to be advice or recommendations. All right, guys, we got a lot of trainings coming up over the next couple of days. Got Trading You coming up tomorrow. We've got Mastermind Group this evening. Friday and Saturday, we have an inner circle. Sorry, I'm just confused as to this right here. Becoming a pattern whisperer. All right, it's on the wrong side. Guys, Tony, so Lee, I need you to move that over. It's a free training. This is a training that Tony is doing. It's brand new, never seen before. He's got 3 trainings set up on the 9th, the 17th, and the 19th, right? There are 3 of them. Choose the one you want. Go ahead and get yourself registered. I'm excited for it. He's going to talk about being a pattern whisperer, what it takes to get really, really good at identifying patterns. So it's free training. Take advantage of it, right? Happy New Year. Okay. Let me go back into the presentation. Oh, I never got the video going today. Let me do that. There I am. Okay. So that belongs under the free online workshops. Mastering the Trade coming up on January 11th for those that are in POP. And then Covered Call Explorer, Power Option Plays, and E-mini Think Tank are all on schedule. The 16th of Jan is a holiday, I believe, so there is no class on that day. I can't even tell you what day of the week that is because I don't have my new calendar yet. It won't be here tomorrow. So that's a Monday. All right, so no e-mini on that Monday. All right. So if you like what you see, make sure you're following along. Looks like we're getting pretty close to adding another website to this page for y'all to go and check out. I'm excited for that and for what we're going to do with it over the next year. So keep your eye out for that. Happy New Year again. Market mornings. Yes. We do this every day, folks. Today was back at it, right? I've been off for a week now with the holidays. And today was the very first one we did. And right at 8:32 this morning, I got an email that says your video training is up and ready. Go and check it out. So you're able to go and look at that video without having to go search for it. Guys, it's there for you automatically, meaning you'll just get an email. So if you go over to Trading Like a Boss, right? Lee, do you have or somebody that's in one of the admins, you have your mic open? If you go over to Trading Like a Boss and go to Market Mornings with Robert Roy, right there, I hit that picture. You can go ahead and get registered for this. It's free. All you're doing is saying, hey, email me and or text me the information of when that video is uploaded. So you're not waiting and you go and check at 8:35 and you don't see it and it gets there at 8:37, you forget all about it. And then you come back tomorrow, see the video and you realize, oh my goodness, that was horrible. Everything just worked wonderfully and I missed out on it. So take advantage of it. Again, it's a free training we do with free notification for it. Everything on this page is free. My favorite number in the world. Okay. All right. Let me take us back in one more time. Presentation mode. Trade of the day. So what trades did you guys do today? We'll get to Amelia's trades in just a moment. What did you do? Drop them in. Funded, not funded. It doesn't make a difference. By the way, Lee dropped in that link to Trading Like a Boss. Funded, not funded. Made money, broke even, cost you. It doesn't matter. Just you're doing the trades. That's what counts. Right? You're going to see starting next week a very hard push for me on getting things done, on hitting that enter button, on getting really, really, really good at it. Because if you don't get really good at hitting enter, you will never, ever learn how to do this, right? I want to make sure that 2023 is your year, that there is no excuses, no reason that you cannot make this year a success for yourself. We're going to do everything we can as a company to help move you in the right direction. Obviously, you're the one that needs to do the work, right? You could drag a horse to water, but you can't make him drink. I could drag you there and say, here it is, right at your feet, but you're the one that has to hit enter, right? But I'm going to help you learn how to do that better. All right, so let's go take a look at Amelia's trades in here today. So we've got 2 of them. I did not even get a chance to look at her document yet. So she did a call debit spread, the bull call debit spread. So if you look down here, 936 in green, she did a vertical spread. It was a buy to open and a sell to open on Big Airplane, on Boeing, January 6th, which is this Friday's expiration. And she had a debit of 80 cents that she put in there. Okay, great. Well, at 9:42, she exited, closed out that trade, and got a credit of $1.65. So wait, if she paid 80 cents to do the trade, they gave her back 165. She wound up making 85 cents. So she wound up with a 100% rate of return, 106% rate of return on that trade in just 6 minutes. So this is one of the 3 trades. She does 3 trades every day. One of 3 trades off of TradeWatch alerts from today, right? And here's another one, a bear call debit credit spread, rather, bear call credit spread. So she did it on the Qs. I didn't get into the Qs today. I got into SPY. I'll show you what I did in a minute, but I missed out on the Qs. So at 9:49, 9:50, we'll call it, she did 3 contracts each of the Jan 269.70 bear call spread. She took in 40 cents of credit. So now they paid her up front. Instead of her paying the 80 cents, they paid her up front. And they gave her 40 cents. When it was all said and done, just a whopping 5 or 6 minutes later, she gave back 18 cents of the 40. So she kept 22 cents, better than half of the premium that she took in. But we're looking at a 36% rate of return in 4 minutes. I don't know about you, but I'm good with 36% in 4 minutes. You beat Wall Street for last year, the whole last year, right? Without a doubt. So today was my Monday. So it's a busy day, not a lot of opportunity for me to trade a whole lot today. Managed a couple of open positions. That's all I did. And then on SPY, what happened was we've got to look at the market to really get an understanding of this. So here we are in the market. We ran up into the European markets open, and then we started to fall, right? But we're still up nicely from last night, right? We got a gap up, pull back, still a nice move up. We got to pull back in here, okay? We got to bounce, and that bounce came in 7:15 in the morning. Here we get 8:15, 8:30. We get a little bit of a bounce, right? Market mornings is going on right in here. And we're making a moving and grooving to the upside, right? And then what happens? Here we get to 9:35, which is the first candle of the market being open. 9:30 to 9:35. We get a long wick, a little shaky. We get a really nice green bullish candle, went above this previous high. And then we get this long stretched wick and we start to fail at that point, okay? Well, now that you see this on the ES, let's go back and look at the SPY. So we got this breakout candle on SPY right here, and we got a retest on the open and a bounce. Like, yes, right? So there's the entry into SPY off of that 385 level. We got 386 is resistance, so right about 385 3/4-ish. So it's about 50 cents or so picked up on the trade. And then the second half I'm stopped out of as we get back into this area right here, okay? Back on the same candle. We're taking out of that second half of the trade. All right, so you know, if you did this trade the same way that I showed it, did it have some profit potential? Absolutely, okay? But the sad part for me is I did not capitalize on the downside. I wasn't sure. You know, everybody's happy right now with the New Year's here, and everything is looking good. And are we going to bounce? And we just collapsed. And after that candle, it became a little complicated for me to say yes to take the bearish entry. These pivots are too tight for me inside of here, so I'm really not interested there if I can avoid it. And by the time I got here, I felt the see, it's going to bounce now. And then we got the next collapse and then the next one beyond that. So I missed out on everything on SPY after that. So a small first trade this morning. Other than that, nothing was taken at all. All right. So not a whole lot there. So with that, let's go take a look at our topic for today, and that's how do we navigate through 2023? And I think the best way to handle this one right now Let me just move some things around here on my screen. The best way to handle this right now is to look at the SPX first. That's really the only way that it's going to work, is if we talk SPX before we do anything else, okay? So, and what I'm going to do is I'm going to take today off of there, all right? That's the first step. Get rid of today. All right. So what happened? Well, you could see last week, we just kind of, woo, yeah, such excitement. We're just, man, like a slow river, right? Just put the tube on the slow river and just flat water, just go nice and smooth. That's what was kind of happening. Now, we had the ups and downs, don't get me wrong, right? I didn't mean it to be that way. But we saw the 8 moving average pinching down. We were pinned between the fib and the 8. And then today comes. We gap up, we run up, and we fail, all right? So if you look at it right now, it's not looking very good, okay? That failure today, we're down 33 points right now, which is not a lot on the S&P, considering where we do get down to on the average day of that, more like 70 to 100 on a day. So it's down, but not crazy down, right? But we did break through that 38.12 level again. Now, we're not closed, so we could get a bounce up. I don't see anything out there yet to say bounce. And I'm not sure how many of you are listening on the outside for what's going on economically, how many other people you're listening to, and so forth. Tripp did a great thing this weekend. Because last week, knowing that we weren't going to meet and get together, he sent some resources out to the inner circle so they can go and research some things out there of economy, what's going on, between inverted yield curve, which almost always precedes a recession. The last 10, I think, were preceded by it. And there's plenty of people out there that you can listen to this stuff, right? I have someone that's in one of my mastermind groups that is an economist. We call him the economist, right? But he's really, really good with this type of stuff. He digs in, he looks at the numbers, all the stuff that I could never do. I'd be just scratching my eyes out if I had to do all of that work, right? It's not for me, right? He's actually sent me some notes. I don't know where he got them from, but he sent me some notes about recession, right? A significant, pervasive, and persistent decline in economic activity, which, by the way, I saw something today that 75% of countries around the world are expected to see a recession in 2023. I can say this year now because we're here. In 2023, we're expected to see a recession, right? Economists measure a recession's length from the prior expansion's peak to the downturn's trough. Right? So we look at the recession from high to low, right? Recession may last as little as a few months, but the economy may not recover to its former peak for years. We saw that happen in 08, 09, right? An inverted yield curve has predicted the last 10 recessions, although some predicted recessions never materialized. Yes, absolutely. But the last 10 brought an inverted yield curve. The last 10 recessions, we saw an inverted yield curve where you're getting better interest rates for that shorter term than you are for the longer term, all right? So not looking well. Unemployment often remains high, which we're not dealing with right now. Well into an economic recovery, so the early stages of a rebound can feel like a continuing recession for many, right? The unemployment component is really where it comes down to, right? If you've lost your job, you can say what you want. If you ain't got the cash coming in and you don't have anything else to deal with for funds, it's an issue. Nations use fiscal and monetary policies to limit risks of a recession. All right. So when we look at the S&P 500, and we've got to go back and look at that very big picture of the S&P 500. We are just in a pure downturn. There's nothing. I got a phone buzzing at me. There's nothing on here that says it's time to go up. Look, Tesla beat 40% better deliveries than last year, than 2021, but missed their numbers, and they're getting punished yet again today for that, right? I mean, that was the one major company we had today that was a bearish candidate for today. okay? When you look at this bigger picture, if we break it out into higher time frames, look at weekly, right? We've not gotten back here for 4 or 5 weeks to this resistance line. We have been at the 0 line for the last 3. And that includes this week, right? So it's realistically, it's the last 2. When you look at the monthly, we had closed slightly above with this corner, this downtrend line. We gapped up on the open of the month, went a little bit higher, and our close down in here again. And it looks like we're starting, because we pierced 2 months in a row. We chipped away at the ice on that 38, 15, 20. We chipped away. And if we close here, we're getting below it. We kind of gave the approval, the authority to, yes, you can go to the downside. We've already broken that ice a little bit. The bears see it and are capitalizing on it. The bigger question comes down to, where does she go? Right? Where does she go? So the 20% bear market was 38.55. So actually, I used to have a line drawn there. Let's just do that now. Let me go in and change this to 38.55. Let's change the color. All right. So you can see the line is right here. Actually, I think I'm going to move this arrow to here so we can actually see it. So that's 20% down on the market. Here's SPX. We're down 20% on Friday's close, right? On Friday's close. We're down that 20% for the year. So we've gone further down, but we're still considered to be in that bear market right now. Haven't talked in a week like this, and I can feel my throat going, whoo, what are you doing? You need to let somebody else talk for a little bit. But overall, just not looking very positive. So now when we take all of this and we spin it out into how do we navigate 2023? Guys, we have got a lot of potential downside out there. I mean, look at housing. My wife and I are looking in Florida right now at a snowbird type home, right? We're not ready to move and retire away, right, from where we are, although I would be happy to move. My wife is not. My kids are here, right? Fiancés, boyfriends, all that good stuff. They're not going anywhere. Their jobs. So we're looking to do both, right? So she's very hyped up on trying to time perfectly when we buy that house, right? Just trying to integrate in there into our portfolio yet another piece of real estate. We already own real estate in Florida. We own real estate in Buffalo, New York. I mean, we've got a bunch of properties here in New York where we are. So we're trying to figure out that right timing. She is trying to figure out a perfect timing for it. She wants to get the lowest price and the best interest rate that she can, and that's the time she wants to pull the trigger. So one of the gentlemen that we listened to, who's a YouTuber, he's a realtor in Miami, pretty good, pretty knowledgeable. He does a video every day, and my wife listens to him every single day. And he came out with a video, and my wife says, "Do you know who this guy is, George?" I don't know who George is. George is George. George of the Jungle. Who's George? And she posed the video up of the guy, and he's talking about what's expected to come with the housing market. And he's talking about a little bit about yield curve. He talks about some of the other economic reports or indicators looking at it. Was it not Schiller, home case, blah, blah, blah. Not one that I've normally had to pay attention to as an indicator, but they're looking at that and saying prices of housing is expected to go back to the 2008 drops that we saw in the market. Now, caution to that. He does put a caveat to that. It's not going to, if the house was 150,000, then it's not going to drop to 150. It's going to adjust with inflation. So floor inflation. So I think they said $140,000 house would be about $180,000. And I think 140 was the median price after that drop. Not here in New York, it's not, that's for sure. But yes, but also we bought houses in Buffalo, New York for $25,000, right? So I get it. You know, now they're worth a heck of a lot more than that today. So I understand. But when you look at what he's talking about, and so many others are talking about, we're going to see some kind of pullback. How bad, how damaging? I don't think it's as bad as the massive naysayers or we're going to get crushed. I don't believe that's it. but I also don't believe it's the houses are going to go down a little bit more, but they're coming up in the next month or two. 2023, they're going to start to rise again. They very well might. I'm very much a believer, my personal opinion right now, the things I keep telling my wife, because she comes to me and she goes, go on your computer. I left the house up there for you to look at. And her big draw to it was the size we wanted. It's in an area that we wanted. It's off the first floor. It overlooks the water. You know, all of the things, all of the boxes are checked off, right? And the bigger hook is it comes with all the furniture. And they listed out at what year the furniture was bought and all that good stuff, right? It's all fairly new, right? And so that's great. We get free furniture. One thing you don't have to buy, but I just don't think what you're getting in free furniture is worth buying today comparative to waiting, right? Even the realtor we talked to says, listen, my understanding, because the economist at realtor.com has said, and I quote, we don't expect that big a downturn in the market. And they keep relating back to the supply that's out there. And same thing, this George guy talked about how the supply is a false number. People are not selling their houses right now, but as unemployment kicks up, the value of the homes drop. They start getting towards losing some of the principal that's in the house. You are going to see a forced supply out there, which is going to extend out much further than where we're looking in Florida. It's about a 2-month supply right now. Which means that they stop taking on new houses for sale or more houses for sale. In 2 months, they'd have nothing left to sell, right? That's the theorem behind it. It doesn't actually work that way, but it's close enough. And it's just not, it's not feasible to me that today is the day to buy. We look every week. We get an email every Friday. We go through the email just to check out what's going on. I go and I look at prices of houses, and I go back and look at the history. And you see they listed them in May or June, and they wanted, I don't know, $400,000 to pick a number for the house, right? And now they're asking $320,000, and you can see the progressive drops in price that have come as we've increased in time, right? And still for sale. Now, there are some that still sell pretty quickly, and I get it. There are some people out there with cash looking to buy. But when you look at the real estate market, when you look at the economy, when you look at what's going on with the potential recession of what's out there, when you look at the yield curve, you look at interest rates. I mean, you can go, they talked about it on CNBC this morning, go ahead and get a T-bill, 2-year bill, I think he said was paying, and I don't know, I haven't looked at it, 4.25%. Whereas, you know, before all this happened, it paid like 0.25%. It's crazy what's happening out there with numbers. I mean, you go look at I-bonds, and they're paying 6.89% right now. Recession-proof is what they are, right? It's all for that, right? The whole idea behind it. So when I look at 2023, folks, I don't see a lot of strength in the market. I don't see a lot of opportunities yet. It's too early for me to look all the way out to the end of 2023. But I think the first and the second quarter, we're going to struggle a little bit. I think we're going to see some of this with the ups and downs in the markets, and then that, you know, just yuck of which way do we go, George? Which way do we go, right? So some of you don't remember, that was a cartoon from way back when, right? I'm bringing home a baby bumblebee. So go check that one out. That was pretty cool. So when you look at this right here, guys, I don't see any strength yet. I see a lot of weakness in there. I see us getting back to the lows that we had. I do not see us climbing up out of here from the bottoming. And you know what's going to tell me when we are? Break out of the damn downtrend and stay there. Break out of the daily chart, go over to the weekly chart and start getting above that weekly downtrend line. Monthly is going to take a little bit longer, right? That's going to take a little longer to really come to fruition, right? 4 weeks, 1 month, 30 days, 1 month. It's going to take a little bit longer than 1 or 2 candles, I think, for the monthly to truly start to show something in there. But we are in a full neutral bias right now. And not that far away from us being at a bearish bias by breaking this 55 on a monthly chart. So to me, I look at it as concern. Now, with that being said, how do we navigate it? If you haven't done so already, shorten the amount of time that you are entering a trade for. Stop the investing component unless either A, it's pure critical, not critical, it's pure disposable income that you don't care. Right? Yeah, it's gambling money for me. If I win, I win. If I lose, I lose. I'm going for the home run. That's fine. Or you have a strategic plan in place on how you plan to enter into certain stocks and buy them for the long term. Will they recover? Yes. Is Tesla, Google, Amazon, all these companies coming back? Yes. Yes. Today? No. No. Apple came out today and said, yeah, we're cutting back on supplies that we're ordering on our open orders. We're cutting back on the open orders for parts for earbuds, AirPods, or whatever they're called for Apple, right? Cutting back on parts for them. Why? They know they're not going to sell them, right? You start hearing these things until you hear we've increased our contracts, we've added more. The factories are getting our orders to us quicker. And until you start hearing the positive components of it, I don't see us getting out of this yuck that we're in. Hey, Trip, morning, Happy New Year. 2 Wall Street Journal articles this weekend stated that the prognosticators say that the market will fall 20 to 25% retracement from the all-time high by mid-year, then move up to 4,200 by year end. That's close to 4,181. Exactly, Trip. It's exactly where it is, right? It is just crazy. I saw one person today on CNBC quote 3,000 as their target for the S&P 500. Do you have any idea, folks, what 3,000 is? I mean, there we go. 3,000 is here, right? That's 3,000, way down here. If we look, woo, baby. 2020 is the last time we've been there, right? That's the last time we've been at 3,000. So scrunch that puppy. Okay, there we go. Right. So not from a standpoint of strength, I don't see us there today at all. Right. So the way to navigate through 2023 to me is shorten the trades that you're in, very tight stops, because as you saw this morning, we get the pop and then we get the fail. Right. For some, it might be best to get to position 1 in the chair very early in the day and wait and let the market settle out. If you're the one that's getting caught there, you just shut that volume off of that computer. I am just so out of practice. Just take a week off. Man, I don't remember to shut volume off and none of that stuff. I did get my milk bottle full of water. Good there. All right. So what companies do you guys want me to take a look at? Let's drop them in. So we've got a smaller group today. I'm going to manage this right to the very end. So and what I mean by that is we're going to manage it for as long as you have candidates. If you guys are feeding me stocks you want me to look at, I will gladly go over them. Drop them in. I know with smaller group, it's harder to get the excitement and the energy going in there, right? I'm doing the best I can, but hey, Trader Will, there you go. Happy New Year to you. Damn, you and Trip are competing here. We'll put an IBM and AMD. Trip's got IBM, AMD, and Micron. Linda's got AMD for a call. Wow, you guys are hyped up, man. We'll jump in on AMD in a minute since Will had IBM in there first. Let's go check that one out. Great minds, great minds. There you go, Trip. There you go. So itty bitty machine. They've got earnings coming up. I haven't adjusted this blue bar, Will, since last week's update on POP. But we are, and you got to confirm dates, but we are to the left of it, which means earnings, if that's right, are less than 21 days away. Keep that in mind. We are in a neutral bias today. So let me see, 140 to 147. It looks like we need a Fibit in there. 34 is 6. Yep, we need both sides. So let's put in the negative 136 and a 118. Okay, good. Bueno. So right now, interesting. Look at where we stretched down to on this, guys. Right down to that 137.26. What was our low? 137.20, 6 cents off of that bottom there, of that fibit that's in there. Why did it stop there? Out of no reason? No, there was a fibit inside of it. So Will, if we break the 140, 137 is our downside target. If we can break the 143.5, 147 is our target. And that's, again, all of you that have typed it in. Let's see. So Trip, I'm going to do Micron after. Let's do AMD. Since we've got 3 of you asking for AMD. Well, let me see that, Will. IBM again. So Will said zero line breakout. Yes. So Will, we've got the opportunity for a zero line breakout. You've got the opportunity for an inverted zero line breakout. So I would look to either one of those as potentials. But yes, good catch. Good catch. All right, AMD. Got the D-bond on there. Zero line, a switchback trade. It's all of it. Exactly, Trip. Kind of overlapping a little bit. All right, so this is AMD. Right. Also, earnings coming out in the not too distant future, but they are beyond our blue bar, which means they're beyond 21 days. All right, so we're in a bearish bias right now as we closed on last week a couple of times bearish. We tried to get up, we pushed into the bearish neutral moving average, and we failed. We're down below that 21 moving at the 8 moving average right now. So 61.29 is the downside target, 57 down from there. On the upside, if we do happen to break that 66.5, you're going to 71.5. So either way gives an opportunity, but just with what markets are doing, I think we've just got a stronger potential to that downside than we do the upside right now. All right. Oh, but I do like it. I like the candidate. Not a lot of movement in there, but if you get down to another, if you got a $2.50 move in there and a $60 stock, you're not doing bad. All right, I hope that helps everybody. There, like I said, a bunch of you called out that one. For a call, Linda, I needed to get above that 66.5 on a close. I'm not worried about the 68.71. The 55 moving average doesn't scare me. But if we get right at 66.5 today, you're at a switchback trade. It goes either way. All right, and then next we've got Micron. Drop in your candidates, folks, because that is the end of them so far. Let's see. Now, if that's all you have, we're good. Don't worry about it. I'm not trying to force it. Okay. So right now we're up 54 cents. That was on the gap. We stretched up, we stretched down. We're in overall bearish. I like the 47.67 as a potential to the downside. Right, without a doubt. I like the negative 272, 47.67. Let's just see, 47.53. Yeah, we're good. We don't need another fibit. On which one will the pressure? Oh, you're talking about on HPQ. Okay, I'll look at that. I'll look at that. So 47.5 is the downside target here. I like where we're at, confluence of the 8. You've got a switchback trade. I'd be very cautious to the upside because you've got a moving average pretty tight in there. But the downside gives you a little bit more opportunity than the upside does. All right. Okay. Will's asking for HPQ. Okay. So we're down about a nickel today. So it is definitely in a bearish, more of a bearish bias than anything else, right? We're down below the moving averages. So Will talked about, is it worth doing a pressure cooker trade in here? So, Will, this is one of those zero line breakouts that we've got to be very cautious of, right? The 21 is not that far above. The 8 is not that far below. So you've got a close enough distance, but you've got to be careful you don't get pinned in between those moving averages where it kind of bounces around a little bit, right? I want to be cautious of that. If we can, now, what I do like better about bearishness here is the moving average is already lined up. We're already in a bearish bias. If I get above the 21, we're in a neutral bias. So, and it's got to close above it. So I'm not even bullish yet, where right now we're in a bearish bias. We've got to look at, do we need a fib in there? So 25, we'll call it to 27. It's about $2, $2.50. We do. We need to split that in half. I don't know how it is in the rest of the world, but it is pouring outside here on Long Island. I had to go out before and got drenched. So I'd be careful of the pressure cooker, Will. I do like the idea of the zero line, not zero line, sorry, of the retest and the fail. We just don't have a lot of room to move to the downside, right? So keep your eye on that one. Let's see. Linda's asking for Disney. Let's see. Linda, I love that you're putting in what you're looking at. I'm in a diagonal. I put on last week. Calls or puts, the diagonal you did, Linda. 2 contracts up over $200 so far. I was looking to hold till Friday. Okay. So you did a calls. Okay. On it. So, all right. So you did a diagonal with calls. So you're bullish on the position overall. Okay. So Disney's got a lot of comeback stuff to contend with, right? With, Eigner and all this stuff. So there's a lot of opportunity there. Let's go back and look at a bigger picture of the fibs. All right, but the overall pattern is still bearish on it, right? So, yeah, I mean, depending on where your strike is, if you want to get called out, you got to watch your short leg on the position, right? That you don't get taken out of that trade. And it winds up underwater on. You said you were over $200 you were up so far. Okay. So yeah, I like that Disney's moving up. If you're doing a call spread, right? You bought a call, you sold a call. So it's a diagonal. It is a covered call with options instead of using stock is all it is. You don't have to buy the equity. Okay. So the 91. So you've got to look at that, Linda. You've got to watch what's happening to your short leg as far as price. Time value is deteriorating every day, but if you continue to go up in price, you're going to see the short leg start to increase dramatically because the delta is going to be at a 1 or pretty close to it with very little time left. So you got to keep your eye open for that. You just got to watch over the next couple of days that it doesn't get too far ahead of you. Right? So I hope that helps. Tripp's asking for the Qs and the spiders. You're welcome, Linda. Okay, so we gapped up into neutral, bearish neutral territory today, and we've pulled back. If you had to move off of that 267.10 today, Trip, oh, I mean, that's right, exactly where I needed to be. So we got the push down below. The question is, did you get a retest on a 1-minute chart? Not great. I mean, we came up a little bit, but not great. Hit a high of 66.83. Yeah, 17.27, less than 30 cents away. And then the fail, but then you just dealt with a lot of sidewaysness inside of there. So the Qs, NASDAQ, the Qs are the ones that have suffered the most this year as far as taking the biggest hits to the downside. Amazon, same scenario. You know, I heard that Amazon hired 280,000 workers through COVID, right, from the 2019 COVID. And now with things getting, you know, a little bit tighter for them and everybody, you know, people don't have these big government checks that they gave out any longer. They're all spent, they're done, it's gone, there's nothing left. So there's talks of having to put in some big layoffs with, they don't it wasn't seem to believe everybody was going to get laid off, but of the 280, you might lose 80,000 of them, right? And that's just one major corporation. What happens when the Walmarts of the world, the Home Depots of the world, whatever, right? Stores, businesses start laying people off. Ironically, that's what we need is the layoffs to drive the unemployment up to get rid of the inflation. So there's Q's. Down below the 267 trip, retest fail is exactly what I'm looking for on it. SPY. All right, so let me see. Okay, the 8 moving average is in the right place, Trip. We're down below the 25% line. So I'm good there. Retest that 380 and fail. We're actually at 13%, just about, Trip. So it may even be a stronger setup inside of there. So retest that 380.5 level and fail. We're looking at 374 as the downside. I'd be careful of the top. You can see we keep plugging into these moving averages and failing. Today was different. We gapped above. New year, baby, we're going to take off from here. That was the expectation. And then reality set in and said, okay, dude, you're the only one saying it's going up, so it's not. Stop. Whoosh, right back down again. Right? Excuse me. So we had Tesla this morning. It was one of the candidates off of market mornings. I hope you got to take advantage of it. We're down 17 bucks right now on Tesla. I had put an order in. I never checked to see if I got filled. So 114.38 on Tesla. Let's see, 114.38. We broke, we pushed up. Pushed up and failed, retest and drop. So right off of that 114.38, magnifique. Exactly what we're looking for, okay? Exactly what we're looking for on Tesla. So now you're talking about 114.5 down to 105.5, we'll call it to make it easier. It's about $9. So you're looking at $6 or $7 on the options. So great setup. Again, take advantage of the market mornings, folks. It is a free candidates. You're getting 5 or 6 a day with the trade setup in hand of what to do. So capitalize on that puppy and take advantage of it. So, all right, it looks like we're good to go. So you guys have a great rest of your day, and I will see all of you at our next update. We'll be back again here on Monday. But remember, everything else is back on schedule now, including Trading Coach's Playbook. Make sure you guys get back into that. It is good to be back. Well, I'm very happy for it. I've missed teaching. So, all right, you guys be good. I'll talk to you soon. Bye for now.